Hello, I'm Matt Gunn, reporter for FundFire. Joining me today is Mark Okada, CIO for Highland Capital. Hi, Mark.
Morning, Matt.
It seems like an ever more prominent term, at least nimbleness, or being able to respond to the current economic environment, to deleveraging, but also to regulatory challenges as well. Are there any of those types of things that pensions are becoming more aware of and that will affect them going forward?
Well, we all live in the same environment, right? Whether you're a pension fund or whether you're an endowment or whether you're a mom and pop's investor, one of the big problems that we're all facing is that so much of the capital markets are being driven by Washington as opposed to New York, right? You need to have the politicians out of the way on a certain level in order for the capital markets to find the right level. And there is so much uncertainty across the capital markets because of this. And if you look at performance across hedge funds and mutual funds, long-only managers, just in general, the active management business has created very little value for investors in an environment like this, where traditional assets have actually done pretty well. If you look where the S&P is, or we talked about traditional fixed income, they've had a pretty good year. And it's all because you can't handicap what Merkel and Draghi are going to do next. You can't, I couldn't tell you right now what the outcome from trying to look at the tax code and regulate it. I will tell you that I know that taxes are going up for the rich. That's certainly coming. But beyond that, I can't tell you what's going to happen with REITs and MLPs and munis and a lot of the parts of the tax code that the capital markets are using in order to execute upon. So there needs to be much more clarity in this environment, but we just don't have that. And we're not going to have it for a while. So that volatility that we see in the marketplace coming out of things like the fiscal cliff, things like the debate around tax policy and deficit reduction and sequestration, things like what's going on in Europe, certainly will continue to provide this or result in this risk-on, risk-off environment. So that's going to be the reality for quite some time for allocators of capital. So how do you really find good returns, and specifically for fixed income investors, how do you find safe yield? We see this massive desire for safe yield, or need for safe yield. Everyone needs to have parts of their allocation, and fixed income was always supposed to be that safe part of the book where it was your rainy day money, it was always there. You knew you were going to get equity-like returns out of it, but you certainly needed to have some sort of return in addition to the liquidity and the safety and soundness that allocation was meant to be. And we're in this environment because of what's going on with policy and with regulation and what's happening, where you're not really comfortable about that. You don't have that sort of comfort. And so people are definitely, and pensions are looking for sources of safe yield within that context that provide enough yield to satisfy their current needs.
Thanks, Mark, and thanks for watching.